Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, I don't know what I want to call this. Markets a look ahead, the Federal Reserve printing money and buying up assets. Are we going to call it a soft landing by the Federal Reserve and Jerome Powell and crew? Well, we're going to talk some numbers, ladies and gentlemen. And of course, we always have solutions for your investment dollars. And welcome. Stop struggling now, gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. Thank you so much once again for being here. And please share the videos because information that you get, financial literacy, makes you be able to make the correct decisions financially for you. That's why you have to pay attention to the financial news and what's going on behind the scenes, the quiet storm, the quiet scenes that nobody seems to want to pay attention to unless you're looking for it. And of course, you have to look for it because they're doing the old okey doke on you, ladies and gentlemen. You're being wiped out. You're having to live paycheck to paycheck. Or in fact, not even being able to live paycheck to paycheck and starting to have to use your credit cards to live. And that's why credit cards is at an all-time record high. And you might as well hold on to your seats if you have a lot of debt because you're going to continue to have some notices talking about they have increased your interest rates, which is going to cost you even more money in the long run. So get your debts taken care of ASAP because they are still printing money out here, ladies and gentlemen. That causes inflation. Don't be fooled about some number about 5% inflation, and I'm going to show you why today. But keep in mind, if you don't get assets pay you. In the next 2 years, those assets are going to be valuable, and you will not be able to come back if you don't have assets because they will appreciate so fast and cost so much money that you're going to need to be making a lot more money than you do now. So come along for the ride, ladies and gentlemen. Let's go. We're over here on the Stop Struggling Now YouTube channel page. Once again, please share the videos. We have plenty of videos here for a lot of different things, but it has to do with real estate, stocks, credits, inflationary numbers, so you know what to do. We come up with solutions and we come up with no barriers for you when we have solutions. So let's get into it. Here we are on the Stop Struggling Now YouTube podcast page. And please notice there's members that are shown here now. And I would love if you would like to become a member of the channel. There's a join button over here on the right hand side, 2 of them, and that's how you can become a member of the channel. And under the community tab, they receive 1 or 2 videos especially for them per month, messages under the community tab for them. They can join me on the live stream, and that's where they'll find the link to get into the live stream and be on screen with me and discuss anything that they want. And on Wednesday Night Live, only members with the icon next to their name are the only ones that can be in the chat room. Everybody else has to watch on Wednesday nights. But on Monday, Wednesday, and Friday nights, that's when our live streams are, 8:50 p.m. So please join us. Now, let's get into it. Look at this. How about the Fed's assets? What they're buying up, their balance sheet, paying for all these, what is it, mortgage-backed securities? Yes, it could be that. Could it be some loans or other companies? Yes, it could be that too. But look at the jump, ladies and gentlemen, from 2020, 3.78 to over 8 million. Oh, sorry. trillion. All right? Trillions. It's not 8 million. It's 8 trillion. Just so you understand the numbers, even though it says in millions of dollars. And notice it's 8.4 million. But in reality, that's $8 trillion that they were pumping into the economy by buying so-called assets. You know what this means? This means that your dollar is being devalued further. That also means you can't go by what these guys tell you with regard to inflation. That's the second thing it means. What is this going to lead to? Well, shall I dare say that soft landing they're looking for? Look at what Treasury Secretary's talking about. Yellen says U.S. banks may tighten lending and negate need for more Fed rate hikes. Now, you guys know if you were on a live stream in the last 2 weeks to a month, I believe I've already called this. We knew there was going to be a credit crunch. That's why you needed to get your credit in order. That's why I made videos about smart credit. It's the best credit monitoring system. I'll even put a link down below because they monitor your not only your score, but your hiring index, your insurance score, and they have fraud protection for you and everyone in your household, all included in the cost. And they report, you can monitor all 3 credit bureaus, and they have letters that you can send in their software. So check out Smart Credit. But I told you guys this is their plan. Because if you keep printing money, you keep raising interest rates, that means you better have another plan to tighten the lending. So now they're going to strip away, after they gave money to what I call their friends, the top 10%ers, after they're able to get loans, after they're able to get bailouts, after they're able to do all this, they have the money, so they don't really need the credit no more, but you do. And now all of a sudden, when things go to hell, like what's the major thing? Homes and pricing? Well, they're not dropping like we thought, 50%. They're nowhere near. 25, 30% maximum. People are still out here buying homes and doing crazy stuff. Okay. But they're still tightening up the lending for certain people. We can't get 1% loans, but nonetheless, let me get into this a little bit. All right, so you guys already know this is coming. All right, this is coming. They have no other choice because inflation is still over. Well, we'll get into that shortly. 5%, but I want to get into the inflation numbers. I want you guys to be familiar with shadowstats.com. Just go over there. In case you're new here and you don't understand the situation, they changed how they calculate the cost of goods. All right. They changed inflation, how they calculate it. So when we go over here in the 1980 based, this is well over 15%, 16, 17%, right? That's what you have to understand. It is not 5% a year. It is not 8% a year. It's 15%. And then when you calculate over here on the 1990, it brings it down a little bit, but they're still going to tell you some nonsense like 5% year over year. And I'm like, that's cute, but what's been happening the last 3 years? So when you have something that goes up like homes 20% and you don't count that, when you have rent that goes up 50%, but you don't count that, but you count other stuff so you can minimize the interest that's affecting your pockets, ladies and gentlemen. That's what's happening here. You have to understand. So here we are. Year over year, 4.99%. That's that 5% inflation. It's bogus. But I want to tell you guys something. Think about this. If inflation 3 years ago in 2020 is, let's say, 8%, that means it cost you, for every $100, it costs you $108 now to buy $100 worth of item, the same items you could buy last year for $100. But what you're not thinking is 2021, what happens? 2021, you say, okay, inflation was, let's say, 10%. Well, it's not 10% from 100. It's 10% from 108. That is now $10.80 more. You're up to 116, just call it $117. Your 117 can buy $100 worth of stuff. Are you getting it? Let me know in the comments down below. Then in 2022, inflation is 15%, but not on the $100. It's 15% of $117. Now, that's like another $22. And now you're up to $129. $130 now buys $100 worth of stuff. That's a 30% increase. But you don't look at it that way because they tell you year over year, don't worry, it's only 5%. I'm like, yeah, but over the last 3 years, that 5% now represents $138 that I need to buy the same thing I could buy for $100. In 3 years, that's a significant difference. And when you start doing thousands of dollars, all of a sudden now you can understand you didn't get a raise to equal that, and it's just to stay level. Never mind that the items are going to cost more, so that means you can buy less. It costs you more to buy less because the prices of the goods and services also has risen. So therefore, your shopping bag gets smaller and you're spending more. That's how it works, ladies and gentlemen. So let's get back into this, shall we? Now look at this. You guys know what they've been telling you, the wrong story. So you're thinking, oh, I guess their interest rates hikes are working well. It's all good. We'll be fine. Well, let's get into the stock market, ladies and gentlemen, shall we? Year to date, the stock market for 2023 is looking at least decent. 15% up on the NASDAQ, 2% up on Dow, 7.7, but annually we're still in the negatives. But that soft landing, but remember that chart that I was showing you over here? Those assets? Yeah. All this money in the supply, the money supply being out here, the lending, the loans, the assets, all that. So now you can manipulate the stock market? Think about it. All right. So what do you need to do? You need to get your credit straight. You need to think about passive income opportunities. And again, I have the number one passive income opportunities are your stock markets, real estate markets. That's it. What's going to blow up the next bull run? Even crypto. What's going to go up in the next bull run is stock market and real estate. And these are going to be off the charts. That's going to be on steroids. There's plenty of money out here in the money supply. And when that happens and credit starts coming down, the Federal Reserve rate starts coming down, they start freezing up lending again in about a year and a half. Guess what's going to happen? People is going to go crazy for assets. So keep in mind, numbers do not lie. You see the numbers. Let's go look here. This is, I don't want to see the M1. Here's the M1 money supply. All right. Look at this. This is in the trillions. Look here. You can barely see it. This is 2020 down here at the bottom on the red. Look at this. That is under 10 trillion or so. And now it's at $120 trillion in less than 3 years. Ladies and gentlemen, you do understand that's affecting you. That's how there's inflation. That's why they're lying to us about what the inflation number really is. It's not 5%. It's double digits. All right? And it's not going to be coming down just because they say so. This is why Yellen and all, they're going to try, they're going to do it. They're going to restrict lending. That's what's going to happen. So again, you have to understand what you're dealing with here, ladies and gentlemen. You're not going to care the restricting lending. Why? Because you're out here buying up assets, equities, which is the stock market. You're getting yourself like, let's get some things straight. Vanguard Fund, I like them. VOO, for instance. You want a return on your money plus a little dividends? VOO. Simple. Go look it up for yourself. Do your own due diligence. You want another one? Look at VTI. But then if you want something else, I'm loving JEPI right now. Why? Because they're basically a Fed bank as far as I'm concerned. They are. I like their JEPI stock symbol where you can get 11.5 to 11.8% annually. I like that. It's steady. It's coming. And I also like Carl Icahn. And his I is in Eric, I is in India, E is in Eric, P is in Paul stock, which is going to get us around 14, 15% right now. And when the stock market goes up, you'll still be earning 14, 15% while the stock goes up as well. So it'll be a beautiful thing. So anyhow, I just wanted to get into that real quick. And then the last thing was the money supply, 1929 to 1933. I want you guys to understand during the Great Depression, this is the billions. Now, the translation I did not do, so maybe you'll do your own homework. How much is $60 billion worth in 1933 compared to now? That's the $1 million question. And whatever that number is, once you get up to 8.7 trillion, now you'll know the difference in the money supply and why it cost a hell of a lot more money in 90 years to buy things than it did back then. Now you will understand the situation. So again, I just had to bring this up because this chart right here looks very familiar when it comes to a money supply chart, doesn't it? Think about it, ladies and gentlemen. Get your assets now. And with all that said, if you have any questions, any comments, please make them down below. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here, but you have to understand what's working against you, because then you can make a plan. If you know it's going to cost you in 3 years an extra 30% just to buy the same things you can buy now, doesn't it make you say, hey, I better start making some other maneuvers or some additional maneuvers to bring in some extra streams of revenue? That's what it should be telling you. You have to make investments, and those investments are going to have to be assets. They don't have to be assets. It could be in yourself, a business. Buy a business as well, but you're going to have to bring in extra streams of revenue. We're giving you some ways to do it. Check out some further videos and live streams on Monday, Wednesday, and Friday where we can talk freely. And I appreciate your support. And with all that said, keep your head up, keep moving, and I'm out.